That's the winter solstice in my part of the world. For those of you who follow the moon and the sun and all those sorts of things, as my good friend Phil does, who'll be joining us a little bit later, that may mean something. We'll ask him what that means to his trading when he comes in just a tick. But before we do that, as always, we'll have a look at the gold chart and see if we've got a breakout trade for today. Let's go. Alrighty, hourly chart, as always, got a pretty tight range by the look of it. There's the high of our range here, and there's the low of our range here. Well, at this stage, that's the low of our range. Current candle may have something to say about that. So, how's our reward to risk? Not too bad, actually, today. It's been very, very poor during the week. Very poor indeed. Did that work yesterday? I wasn't in. I wasn't trading. No, that would have been a failure yesterday. Day before, high there, low 10, low there. So in there, oh, you might have survived. Looks like you might have survived, and if you did, you got the money. So I wasn't trading yesterday or the day before. Monday, I cancelled the order before I went to bed. How did that work out? Monday, Thursday, Wednesday, Tuesday, Monday. That was Monday. So Monday might have worked, dependent. Tuesday, no good. Wednesday, I should have worked. Yesterday should have worked. If you haven't taken profit, you'd be still in. But you should have taken profit, most definitely. All right, looks like we might be challenging this low with a couple of minutes to go in the pre-London session. How's your week been, guys? Hopefully good. Hi, Abraham, Daryl, Gary, Jeffrey. Good to see you all. Let's see what's happening on YouTube. See who's in there. Sometimes hard to find that thing on YouTube. There we go. All right, happy days. I think I could safely place the buy order. And when I was starting to talk about that, wasn't I? Risk to reward looks pretty good today, up to the DR1 and down to the DS1. Doesn't look too bad at all. Get back up there. Don't want any more range. Thank you. Listen to me for 1 second. Good day to you too again, Abraham. I hope your week's going well, and I hope it improves just a little bit with the next hour or so. Stop there. Don't want any more range. It's a bit like a double bottom sitting here, doesn't it? What's the 4 hour look like? Break back inside, false break. This one might be serious. We shall see. I'm really wanting to get into gold short, but I was hoping to get into it long before I got into it short from Monday, and just didn't set up. Well, hasn't panned out either. Oh, I don't like that down there. Much prefer the price to be in the middle of the range when I go to trade a breakout or a range breakout. Frightens me down there. We will need a pullback. I'll place the buy anyway. So we're trading this at 0.25% now, guys, by the way. I think that works out to be 0.25% on this account. To buy stop at 1934.95. 1934.95. Not 0.95, sorry. Goodness me, if gold goes to that level, something will be interesting. 1934.95. I'm giving us time for that pullback now. Right, our stop loss will be the low of the range, which is 1927, let's say 65. 1927.65. And the take profit will be DS1, which is show me, do. Not going to, yes, it is. 1920.92, let's say 1920.95. 1920.95. Okay. Doesn't like that. Buy 1934. Okay, I've got them ass about, haven't I? Stop loss. No, that's right. Take profit 19. There, that's the one that's wrong. DR1's what I'm looking for. DR1 level is at 1941.45. 1941.45. There we go. So the long is in place. Now the short, which is a sell stop. And who can remember those levels? Not me. 1927 something. 1927.65, I think. 1927.65. And the stop loss will be 1934.95. 35.95 rather. 34.95 rather. And the take profit will be the one I put in before, which was 1920.75 will do. 1920.75. 934.95, 927. Right, that all looks good. There we go. So we're selling here. We're getting out here with the stop loss there. And we're buying there. We're getting out here with the stop loss there. So, as always, if one triggers, cancel the other. And happy days. That's all she wrote for the gold trade for today. Now, talking about gold, I might as well have a little bit of a shot at it while I'm here. Tried to go long gold on Monday and on Tuesday, anticipating a test of the monthly pivot. It was at that point I was going to look for short. Hasn't given me that opportunity yet, and short is my bias, but I was attempting to get long to get short, if you like, and hasn't panned out. What do I need to see now to get long? To get short. It's a tough one now because of that candle. Yesterday's bars not playing the game. I'm absolutely not sure what I need to see to get short. Maybe just a bull bar will do. Any bull bar will do. Maybe retesting the trade line and, of course, that horizontal level. But I need to see that before I go. And it's simply not there. Righto, what's cooking? Couple of things today. I did place an order on something. What was it? CAD Swiss. Oh, we're back into CAD Swiss, that's right. Why can't I see it? Because of that. That's why. Gold has been triggered. Okay, we can cancel the long. CAD Swiss. Let me have a look at that. Bring that up onto there. Get rid of that because it just gets in the way. So what we're playing here on CAD Swiss is just a classic slingshot pattern, really. These 3 bars sitting here on that trade line are just too noticeable for me. The other part about it, of course, is we've been in CAD Swiss, or we were in CAD Swiss for nearly 5 weeks, and we took a nice chunk of change out of that, and we're waiting for this level to break to get in on a retest of that level, so to re-enter on that break and retest. Hasn't happened, and I've been waiting for downside to give me a higher low, maybe in this vicinity, around about the monthly pivot area, which would have given us a nice inverted head and shoulders. That's still there, and the daily chart's teasing me like no tomorrow. And I've got to say the daily chart on most things are teasing me like no tomorrow. I had the slingshot candle pattern set up here, but the angle was just a little bit too sharp for me. I need about 45 degrees before I'll trade that, and it really just not there. It may yet produce a short, but this conglomeration of inaction, if you like, price inaction, is really telling me that whenever this breaks, it's going to break fairly hard. And that's why I just don't want to miss this breakout if it happens. And it's a slingshot candle pattern, as I said, hint of an ascending triangle, but it is definitely in breakout mode. We're looking for a breakout, but not sure which side that goes to first. As I said, I thought it may come down here and give us an inverted head and shoulders, but so far, nothing. And of course, if it does do that, the long shouldn't be entered. But if it breaks out to the high side, then we've got that covered. So that's CAD Swiss. There was another one today, and it was kind of a toss-up with Pound Aussie. And Pound Aussie was kind of each way. It was nearly an OCO for me. And I'll show you why. I had a trade line coming through here. Or was it a bit shallower? That's interesting. That's the trade line. Didn't look like that this morning. Funny how that works. That was the trade line I used, most definitely. Maybe I was looking at it on a 4-hour chart. No. Okay, I saw a false break this morning, but I'm not seeing it now. And what I mean by that, maybe I was just a little bit too loose. Yeah, it's kind of there. When I'm looking for false break, I'm looking for price to break the level, which is the trade line, consolidate below it, come back above it, close above it, and then retest it. Well, it's kind of done that. But gee, it's not clear, is it? It's not crystal clear like you'd like to see. So the temptation, of course, was to enter a buy order here and put my stop loss below. Yet the risk to reward on that monthly pivot and this level here, just not so great. So I decided not to take that one. But the other side of the OCO is really and I'm seeing these, well, really wide 3 amigos, I suppose. And that's a retest. On the flip side, okay, is it a false break or is it a retest? It's right on the borderline, right? So I'm not 100% sure what happens next, but it's binary, I believe. Something's going to happen here. It's either going there or it's going here. So I was very tempted to take an OCO on that, haven't, and I'm now just going to wait to see what signal I do get next. But that one there is very, very tempting to play an OCO. Pound Kiwi, Ash and I spoke about this on Monday, And got a beautiful bar there yesterday, big bearish engulfing bar. Not my thing to trade, and trading into the weekly pivot with poor reward to risk is not my thing either. But I think a pullback today on that move, in particular to the daily pivot, makes perfect sense to me. And if I can find something on a 4-hour chart that works, then I'll be looking to trade that short. Great double top sitting there. So off the daily pivot, I think would be really nice. Got a support trade line in formation or under construction, as I say. Not there yet because we don't have a low, a defined low, but watching that like a hawk because I am keen to trade this short. Maybe even a rejection bar up here if it had a nice green body and a long tail giving me the double top lower high. I'd get interested in that as well. So that stands out. Pound Aussie, as I said, was a flip of the coin. And still dollar yen is on my list big time. Why? As I said the other day, it's at a great, great level. Not just the top of that channel. Maybe just the top of that channel. Thought I had another confluence there somewhere. The level's not that superb in terms of support and resistance here, but it has been mini support and resistance. There's no question. But I think if you fancy this as a turnaround potential, we're right on it. We are bang on that price level. So I'd like to see, got a little bit of a tweezer top there or a double top on the daily chart, a bounce off the weekly, give me a lower high, and I think I'd be into that one like Flynn as well. Catherine. Hello, Catherine. Could have had a decent trade on after the inflation data yesterday on 15-minute chart break on the downside, 1 to 6. Nice. Oh, 1.6 to 1, sorry, before reversing, going down a little bit again today. Cable. Let's have a look at cable. Where have I got that? Here somewhere. Okay, so yesterday on a 15. Go to the 15. Let me get rid of the EA. Actually, no, I'll put a chart up. Don't want to get rid of the EA. Yesterday, 15-minute chart. 15-minute break to the downside. Okay. So break out of a trade line, maybe. Nice little pullback away from it there. Wow, big candle there. And on news, this news here, no doubt. Or was it this news here? Anyway, broke to the downside without question, but then, yes, turned around and going back exactly where it began. Nice little +1 there, Catherine. You would have had to have withstood all of that, however. 1, 2, 3, 4, 5, 6 candles to get in and then another pullback away. So there's your entry, right? Bang. Nice. 127.49. Which is, I'm getting there, which is there. Okay, so you were trading a break of not sure what. On your trading view. Well, there's the setup for me, that one, but you would have to have been patient and brave to stay through that. Yeah. Can you see it, Catherine? And then you got another approach and return. Yeah, cool. All right, I think that's about me for now. Keen on gold short, keen on dollar yen short, keen on pound Aussie short, and keen on pound Kiwi short. A lot to think about. Or actually, pound Aussie, no, I'm not sure. Toss of the coin on pound Aussie, but I want a signal either way. That would be really cool. Of course, we've got the euro untested daily pivot today. I don't need to tell you any more. That will be my bias until it is tested. So really be nice if price broke out to the high side and then gave us a false break or a double top and a lower high, something like that, so we can trade it back to the daily pivot. There's no setup there at the moment, but watching that one as well. How's gold doing? On the H1, just at entry pretty much. So when we entered? Yes. Okay, so it hasn't done anything except tip us in. Hate that. All right, that's me for now. G'day, Ash. Oh, he's playing his, what's that? Not ventriloquist.
I'm there, mate. I'm there.
What's that dude's name?
I know the guy you mean.
Yeah, him.
I can't remember. I've just, you know what I was doing in the background? I was just seeing whether I could enable everybody to talk to everyone.
Marceau.
Oh no, he's the mime artist.
Sign, yeah.
Oh, okay.
Marcel. exactly what I was talking about.
I was thinking of him. There was another guy that used to do this trick with a mic, he pretend the mic cut out.
Oh, okay. No, I didn't know him. He must have been a Pommy, was he?
I think he was actually. Yeah, he was. Can everybody try and message everyone? Can somebody? Good morning, Lewis. Lewis, could you just see if you've got the option to now message everyone? I was just working in the background to see if I could change that for us. I'm just seeing if that's. You can message everyone.
Okay, the messaging thing seems a bit haywire.
Oh, is it? Okay. All right.
Yeah, because I can only message individually to Jeff, to you, but if I put the message to Jeff, and it appears that it's sent to you. So I'm not sure who do I send to actually.
Okay, I've just changed it, but it's obviously not worked. Okay,
all right,
maybe we need to change it.
Okay, I've sent out a message saying, what is your view on USD CHF? I actually meant for Jeff, but who sent it?
Jeff probably saw that. I didn't see that one.
No, I didn't.
Oh, in that case, let's just all come on mic, and then we'll talk to each other this way.
Right.
Well, let's have a look.
CHF.
Now I did. You were above Catherine there, absolutely. Sorry, Lewis. It is there.
You got the message?
I got the message, mate.
Ash, did you see the message? Is it sent to you? Because on my panel, it stated they sent to you.
No, I didn't see that one. Only good morning from you.
Yeah.
Good morning.
Yeah, and then on the panel, it was direct message to you, but then it went to Jeff. I intended for Jeff actually.
Okay. All right.
Let's have a quick squeeze then, hey?
Yep. Okay.
All right.
Swissy. Thanks, guys.
Cheers,
thanks,
mate.
buddy.
Where's my thing? There it is. Dollar Swissy. You liked Dollar Swissy a week or so ago, didn't you, Ash? I think.
Yeah. So the dollar and the Swissy are two currencies that are to be watched. No question. So dollar, Swiss, the pound, and the probably the Aussie and the yen as well. Probably right now. A few bits and pieces that I like and don't like about all of them.
Okay, I think there's a bit of sentiment cycle in here, and if that's the case, there's your wall of worry. There's your reversion point. Is there a trade? Maybe you could have traded that. Ooh, scary now if you did. Apart from that, she's in a vicious downtrend. At the bottom, little double bottom. Yeah, I'm okay for a higher low somewhere. Nice little channel break there. Retested that. Bit of a buzzard sitting there, but no context. I haven't got a trade, Lewis, but I'm a fan of price going that way. So I'm a fan of the long. 3 amigos, 1, 2, 3, broken, retested. Didn't go too far, hit resistance. Now it's come back and hopefully produced a higher low. Maybe the second higher low. Maybe there's one more left. Then I'll look to trade it long. What are you seeing, Lewis? What do you like, Ash?
So there's a few things about both the dollar and the Swissy. Firstly, the S&B have got a rate decision in about 20 minutes time, so that would need to pass anyway. You know, regardless of setup, it's way too close. I mean, I do sort of advocate trading in news, but not this close. You know, unless you get a really clean setup, I wouldn't be that interested in this one. I think your stops are going to have to be all over the place. So
the Swissy.
The interest rate decision from the
SMB.
Yes.
Ooh.
Yeah.
Okay.
Yeah. So that's the first thing. But the other thing I like about the Swissy is the negativity in the global economy, because one thing about the Swiss economy is that it's actually performed relatively well. You know, we got a situation right now where some economies are obviously performing better than others, and Switzerland is falling into that category. The dollar, the message from the dollar is a difficult one in many respects, because what initially happened was that Jerome Powell obviously and the Fed decided to pause on interest rates, but came out with a hawkish statement. But the market just didn't believe it. You know, the market just swept aside the fact that they'd be raising interest rates again, and decided to sell off the dollar and buy up equities. But that has changed. You know, over the last couple of days, that's changed. And Jerome Powell came out yesterday and reiterated that it is, hugely likely that even though the pace will be slower, more interest rates will be coming back into the market. So it just goes to show the difficulty of trading off what central bankers say, because of course they can say something, but it still comes down to whether the market believes them. The jobs data today from America, I think, is going to be another pivotal one. Because if the jobs data is strong, then obviously that then puts the Fed kind of back on the front foot when it comes to interest rates. And that may well start to see the dollar strengthen. The jobs data comes out weak, and of course the reverse is likely to happen. When it comes to equities, in some respects, I think they could go either way, because we've seen particularly the FTSE, which was your call on Monday for a short. The FTSE is reacting to the global economy as it tends to. You know, it's much more aligned with the business cycle than the Nasdaq, for example. And the FTSE's tanking, and the FTSE's been tanking. And one of the kind of speculations right now is that the Fed and the like will reduce interest rates, but we are not going to get a bounce from that particular statement, because we're going to go through a deflationary recession. And it's, this is where the whole thing becomes quite confusing. And the reason it's been confusing is that the market has been delivering data which has been kind of out of alignment with what you'd expect. You know, interest rates going higher, you would think that there would be more foreclosures, but as debt goes up and companies and households are unable to pay that debt. However, the consumers held up really, really well. So interest rates have continued to go up. People are hoarding the labor market. They're deciding they're not going to get rid of them, because during COVID, as soon as COVID kind of managed to clear and they needed the workers, they just didn't have them. So businesses are a lot more reticent to start kind of firing their workforce. But what that suggests is that we've got this kind of tension building up, and something pops and then everybody just gets rid of everything in one hit, rather than kind of dripping it down. You know, we've sort of had not a weakening labor market, but a really, really strong labor market for a long, long time. And that normally suggests, a bit like when you look at valuations, when evaluations get very, very hot, it often suggests that we're just going to get a tanking of those valuations rather than a drift down. And I think it's the same with the labor market. So I wonder whether those labor market numbers could either way kind of affect the equities negatively. You know, we might see a negative effect on them either way, because strong labour market would suggest the Fed are right and they're going to be tightening further, so that's going to reduce equities. A weak labour market could suggest that actually recession is gathering pace, depending on how weak it is gathering pace, and we also then see some weakening in equities. So the long and the short of it is that the confusion of the picture would suggest to me that trading the dollar Swissy on this particular day is probably not wise. And we did discuss the pound Kiwi on Monday as a potential short, and yes, it's come off, but again, I don't like it anymore because the inflation data from the UK yesterday was back where it was the last month. 8.9%, I think it came in at. So way too high, suggesting that the Bank of England are going to have to do more. And the way I see it, the only fundamental driver that takes this down now, that takes the pound down, is a dovish statement from the Bank of England. And that particular situation seems to be kind of sailing into the distance with the inflation data. How can they come out with a dovish statement? Well, they can, of course they can. Nobody knows what they're going to say, and they could say, we don't like inflation, but we're more worried about the economy, so we're still going to sort of remain, relatively cautious on the approach. Or they could come out and say, what they should say is that we're going to fight inflation right the way down to 2%. We don't care what it takes, but the economy will break, and that's just going to be that. And then the pound potentially could take off from there. So the pound for me is not a trade anymore. It's almost like the setup, because of the way I look at the market. I'm not saying that people shouldn't trade it.
Yeah, and with the FTSE tanking, that kind of rubber stamps it, doesn't hurt.
Well, exactly. That would suggest that the pound, it is, more likely to go up than down from this particular point. Certainly, investors are concerned. They're really concerned about the valuations of the pound. But how could you?
Sorry, Matt, just interrupt for a sec. Tajul on YouTube. Dollar Swissy, you're in dollar Swissy now, or you've got an order set dollar Swissy now? So you're trading the news. Which way is it, mate? Are you already in, or you're anticipating a short reaction? Brave man. Or if you've got a system to do it, by all means, I've got no problem with it at all.
Yeah, I think this is the thing, isn't it? And it is all about systems. If you've got a system which trades around this stuff, I think you've got to go at it. No question. And I normally would. I'd be quite happy to trade the news if I had a clear, at least, opinion of what's going to happen. But my problem is that I've got a bullish case to be made for the Swissy because of the global weakness. And also the economy, the economy, the economic picture and landscape in Switzerland is pretty robust. But on the same side, I've got a bullish reason to go for the dollar, because the dollar may well strengthen after these jobs numbers, purely because the expectation now appears to be getting through to the market. The Nasdaq is really probably the best message for how all of a sudden investors are reading what Jerome Powell's saying. They were basically going, you're wrong. Are they now saying, okay, maybe he's right? And if they're saying maybe he's right, then all it's going to take is some strong jobs data for them to go, actually, we better not really gamble with this stuff and maybe get out of our positions. And that is sending another message back to the dollar traders. Of course, the bond market is saying something completely different in many respects. The bond market hasn't really moved much when it comes down to the yield picking up. So they're kind of saying, well, you're probably not going to raise interest rates. I mean, I think it's the 3-month yield is below the actual interest rate right now, and that's the most susceptible to what the Fed says. So there appears to be kind of like so many kind of conflicting positions going on in the market. I think that the only clear message for me right now is that the Bank of Japan remain dovish. So yen shorts are on the tape, and obviously the problem with the yen shorts, as you quite rightly pointed out, is that dollar yen, as an example, is at a resistance point. but in saying that, difficult really not to kind of go with the dollar with the dollar versus the yen in this situation. But this is where the things just aren't aligning for me. You've got a fundamental kind of message. I mean, look at that dollar Swissy. It's all over the place. Here we go. We've had the interest rate. So 1.75%, mate, is the interest rate from the S&B, which was expected.
Yep.
The 1.75%. So it's possible now that the dollar takes over. I mean, I wouldn't want to trade just because this bar is buying up, but it's possible the dollar takes over now. Because the expectation was for 1.75%. Possibly that was priced in. Now we move to the next thing. Well, maybe not now, but in the next 15 minutes to the next hour, we move to the next thing. And the next thing's really those jobs numbers. So if you get a setup long on dollar Swiss before those jobs numbers, then you still have to rely on those jobs numbers coming out strong. Because if they don't come out strong, then you're going to have to reverse your position. So this is where people say don't trade the news. This is where the advice is don't trade the news. And it's when you get a basket of stuff coming out, the really high important stuff, Swissy bank decision, the Bank of England bank decision. We've got yesterday Jerome Powell's statement, plus now some data which could actually back up what he was saying. So this is where trading the news on a day like this is just in my opinion, because of the way my system works, it's just too difficult. It's just too much of a difficult call. And it won't be something that I'll be doing. I'm not interested really in this market in the way it is.
Yeah, look, I've been saying that all week. I'm not interested because it's not showing me anything. It's really just, it's not even sideways properly, if I can say it that way. Yeah. It's just all over the shop, and I can't say that it's not PC, so I won't say that. But I'll say it's like a Heinz soup. It's got so many versions, right? Yeah. So yeah, I'm kind of sideline-ish, and I have been all week. Just a couple of things that were maybes, not real definites. Around that news thing, I think if you can line up all the ducks, and as you've just suggested, we've got Swissy news and dollar news today.
Yeah.
If you get it right and you're in the market at the time, you can have a really, really nice ride if all the ducks line up.
Yeah.
But they have to, really.
Yeah.
Otherwise, you're going to get a seesaw. And that's
you're absolutely right, mate.
A bit frustrating.
And I guess it's one of those things that you sort of you look at it and say, this is where you're going to make your money fast. In an environment like this, you're going to make money fast. But we know that when you go after the fast money often enough, eventually you're going to get run over. It's not going to work out. So a day like today is when you look at it and go, yay, I was on the right side of it, or no, I'm on a terrible side of it. And as long as you can manage the account, then it doesn't really matter if that's your system, as I say. If that's your system, that's your system. But the problem with this kind of approach is that most people can't handle the emotional roller coaster. They end up potentially losing on a day like today, and then chasing the market, just trying to recover money that that they probably shouldn't have been going in at 1, 2, 3, 4% at. It's one of those markets that you can certainly play, and you can maybe sort of see whether there's a bit of cash in it, but you'd want to reduce your risk right down. And due to that, I suppose it almost becomes pointless. Why would you even risk making a little bit of money when the probabilities are kind of difficult to ascertain? Where does the probability lie with this stuff? I can't figure it out. It's a flip of this to me is a flip of a coin. So it's a 50-50.
Over the years, as a group, we've tried to master this news trading thing as a group, and we just haven't come up with a formula that's consistent. Yeah. And I put that down primarily to, if you're trying to trade the news per se, as in have a stop order, spreads will kill you because they go out so much.
Yeah.
And if you're in the market prior to the news, your stops have got to be that wide that your risk is really exemplified.
Yeah.
So, it's a tough one. Really is a tough one. But people do it and do it successfully. It's just not my bag either.
Yeah,
I don't
it's
need
not for
I don't
me.
need excitement. I just need to look at the account at the end of the month
Yeah,
and go, oh, that looks
I know what you
better.
mean, mate. Well, do you
That
know?
looks
I think
better.
that's the thing, isn't it? I think as time goes on, your experience actually takes you away from the excitement because inevitably, the market is exciting. When it's moving like this, it's exciting, especially when you're in a trade. But as time goes on, actually, what you're trying to do is get away from the stuff that gets you excited, the stuff that kind of gets you going. What you're trying to do is just kind of like make it really, and they people have said it for years to me, but before, but they said it before it really sunk in, that you really want to be cold and not feel anything with the market, and you do actually. You really don't want to feel a thing. You just want to be able to put your orders on, get on with your day, and come back at the end of the day and see whether you're in profit or loss. And if you're in loss, you got to learn something. And if you're in profit, you may have to learn a little bit more, but it suggests that your system's working, so you can put it aside and move on to the next thing. But the excitement part of the market, from what I've learned, and as I say, everybody's different, but from what I've learned from my approach over the years, the excitement part of the market is actually where it gets dangerous. It's exactly the bit you want to avoid, because then it doesn't become about money. It becomes about something else. And unfortunately, this not unfortunately maybe, but this is a money making exercise. It's a job, and it's a job that sort of that does need hard work and sort of to kind of get yourself in the right place for opinion and emotionally. But at the end of it, you want to get paid at the end of the month, just like any other job, enjoy it or not.
Oh, yes.
Lewis is asking, do I think the pound will suffer? But this is the thing. At this stage, I don't. I don't know how I can think. The pound might be coming down today, but it's not a buying opportunity for me. Don't get me wrong, because I don't like the level. But I don't see how the pound can suffer. With inflation where it is, and it's worse than anywhere else. With inflation where it is, the Bank of England should be reacting. So if these guys react, there's no reason to suggest the pound is coming down, from a fundamental perspective. However, if the Bank of England say something else, and this is where it becomes a flip of a coin, what's the probability? Well, the probability is they will go hawkish, not only with the rate, but afterwards, in the statement. That's the probability, because inflation is too close to 10%. I mean, that is a crazy number. So that's the probability, but it doesn't mean that's going to happen. They may well do the exact reverse. Now, the good thing about that is if they go hawkish, it's probably a little bit too expensive anyway, the pound. So there's not really a trade on. If they say something dovish, there's probably enough time to get into pound shorts anyway, because it's got a long way to come down. So we should be looking for, because the risk, we talked about this a few weeks ago about where the risk is. The risk to the pound is to the downside, not to the upside. But it does need something to drive it down. CPI data getting sold off like this, I find quite concerning. I don't like the look of that at all. But obviously, it's there's a chance that that there is an expectation that the Bank of England still say something dovish. Don't know where that's going to come from, but there's a chance they do. Now, if they do, as I say, there's a long way down. So I think we've got time. But my view right now, Lewis, I've got to say, is that the pound is not a selling opportunity. The price makes it unattractive to buy, but it's not a selling opportunity. But the risk is down. The risk is to the downside because there's a lot further to fall. It seems. I mean, you have to qualify everything with that, really, don't you, mate? Because nobody can say anything with any certainty. You can't do it.
Right.
You have to make in the end, you've got to recognize that this is a speculative game, and we are speculating the whole time. And you've got to try and get around that by making sure that you don't get excited, that manage the money correctly, make sure you got a system where you're protected and you can still make multiples of your risk, and you're okay. I mean, that's really sort of what trading in the end comes down to. But nobody can say anything with any certainty. As soon as someone says this is going to happen, stop listening. Because I mean, how many times you see it on Bloomberg? Morgan Stanley say, those guys say it all the time. And then the absolute reverse happens. I mean, I only read a week ago that the Nasdaq was going to the moon because of AI. It's reverse,
like I told you on Monday, these guys get paid to actually say something.
Yeah.
They can't say nothing. They've got to say something. So
well, that's okay, but don't say it's definitely going to happen. I mean, like, at least admit that word.
Yeah, just say, oh, look, this is potentially the way it's going to go.
Yeah. Well, that's all we know, isn't it?
I mean, if it doesn't do that, it's going to do this. So
yeah. But that's the truth, though. In the end, if it doesn't do one thing, it will do the other.
Absolutely. My whole trading is based on that,
Yeah, Lewis has got the pound CAD short to tighten the stock. That's the thing, Lewis. It's one of those, isn't it? If you're in a pound CAD short and you're in some profit already, then if I was in a pound CAD short, I'd want to hold on to it. I really would want to hold on to it. If I was in a decent place, I'd want to hold on to it, because I say the risk is to the downside. Actually, maybe not so much on the pound CAD. Retail sales from Canada were pretty solid yesterday. I mean, that could be an inverted head and shoulders, but yeah, you tighten up your stops and you do your thing. Truth is, if the pound's going to weaken, it's going to weaken against the CAD as well. So, probably. Yeah, I'd hold it,
providing the market doesn't fall out of commodities and gold doesn't tank and oil doesn't tank.
Yeah.
All those
this is the interesting thing, mate. Is that with deglobalization, this is really what we've kind of got going on, a bit of deglobalization, then the commodity value should go up, because of course, if countries decide, we're not doing these kind of multinational deals anymore, there'll be some bilateral deals, then it shrinks the supply to the rest of the globe for those particular commodities, and it'll have a much more difficult process to get to the end user. So if deglobalization continues, which it looks like it's happened, it looks like that's what's happening, and the war in Russia has really exacerbated that, because of course then you start getting a split of nations. I'm on this side, I'm on this side. So you get this deglobalization happening. Commodities actually should do pretty well out of that, and that does suggest that the likes of the Canadian dollar, maybe the Aussie and the Kiwi do very well in time. In time. But I was reading the other day something about Chile. I think that they were doing a deal with somebody other than America. I think they were cutting some ties with the States, and this is where sort of like things do escalate, and things for the dominant nation in America do escalate if people decide to turn their back on them and say, actually, we're not supplying you specifically. You're not as powerful as you were anymore, and we could maybe do other deals with China or somewhere else, because the dollar want to control. The United States are able to control everything, maybe. Not because they're the biggest nation, but they've got so many nations in their pocket.
For now.
Yeah. For now.
Things change. And actually, on that subject, Phil, if you're in the room, you were telling me earlier today about some guy who was respected and has credentials, was talking about, and we've been talking, Ash, about, or I've been talking about the dollar being worth nothing at some stage down the track, and what repercussions that has on things like gold, oil, commodity market, the equity market, all sorts of things are going to be affected by that. Phil, what was that dude saying? Because Ash will have a good view on this, I'm sure.
Oh, sorry, mate, I just missed that last 30 seconds of your conversation.
Okay, we were talking about, you and I were talking today about that chap, and I can't think of his name. I don't think we talked about his name, but he had cred, who is a former Fed member, as I understand it. And he was giving his opinion, and he was giving his opinion on what is likely to happen. And I've been talking about this for ages, that I think the dollar's worth nothing down the track. He's got not so much a different view, but an interesting view on what that means, right? And what was that?
Yeah. Have you got have I got my microphone on, Jeff?
You do? Yep.
Okay. I've had trouble with my microphone, and I've just trying to track it down, and I realised that Mr. Microsoft's been mucking around with our microphones.
Oh, that wouldn't never happen. So.
Yeah. Anyway, yeah, that was back. I haven't found that article yet, Jeff. That video, but he was from the Fed. He was an ex worked for the Fed.
Yep.
In the past, and he said everybody, the public, all the analysts, he said people have got no idea how it works and why they make the decisions they do. And he pointed out that, and I just almost don't want to say this because I'll get it wrong, I guess, but he said most people look at the GDP and then base their decisions on how much the Fed are printing and how much they're doing this, all based on the GDP. And he said it's got nothing to do with the GDP. And he explained where it does come from. And when
that's the health of the economy we're talking about?
Yes, the health of the economy in general, that's right. So, and when he explained where they get their figures from and how they figure it works, or how they know it works, obviously, it was nothing like people think he was right. So I re-looked at some of my charts, and there's a bit of mystery there at the moment, as we all know, and it explains a lot of things. So, but I'm not going to talk about it because I don't know what I'm talking about. But when I dig it out, find it out. It's only been this week, but I've listened to dozens,
Yeah, when you find that, we can share it. Yep.
Yeah, because that's why I sent you a couple of 2, 3 or 4 sites this week, Jeffy. I've been listening to a lot of stuff this week, so it's interesting. Just looking for direction because it's certainly all over the shop, isn't it?
I'll tell you what, one that you did send me really raised my eyebrows, and I'm now going to use this rather than things like Forex Factory and FinViz because it brings everything together.
Yeah,
Can you share that with us?
Yeah, sure.
Absolutely, Ripper.
I've got a couple. I've got 3 here. I think I've got for the show because they might be handy. We can start with that one that you're talking about, and this is the front page to it. It's just called Trading Economics.
Well, have you got the ability to share? I don't think you have. Hang on.
I reckon it just says someone else is sharing and I can't share it.
That's right. You're about to be able to, and now you can. Guys, I reckon this is a cracker website.
It's just called Trading Economics, and that's the
maybe you already use it. I don't know.
That's the front page of it. Just so you're familiar with it, and then you've got a calendar.
Yeah, like everything else. Everything else has got all of this stuff.
Yeah, that's right. This is just very plain. I noticed my ad blocker only blocks 1 ad from it, whereas it often blocks dozens and dozens from these sorts of sites.
Can you go to markets, currencies, please?
Yeah, sure. And then obviously there's a page for.
Yeah, and the news is up to date. Absolutely.
Up to the minute.
This is the one I like.
And this is markets with currencies, and it's all just live all the time.
So this is FinViz on steroids, right? It tells you exactly what the in my mind the relative strength of these currencies are, because it goes through every currency pair by exchange, and if you like.
It's all logical. The whole site's just so easy. I'm not very good with websites and things. This is just so easy for me. It's amazing. You see on the side, there's just got major currencies. You scroll down. Europe is there. America's there.
Yep.
Asia. Just that, the whole thing, everything you want, just everything you can imagine. It's really, I just find it's fantastic. And the news section is really good. Like, I'm not as much detail on the news as Ash is, but this you just scroll down, you can see this was 7 minutes ago, and there's just a real big picture of what's going on that particular topic. If you want to know more about it, you click on there, and it brings up more detail, charts, all the bits and pieces you want to know. It's just great. And if you don't, well, you just scroll down until you find whatever you're looking for, and then, or if you want to know what about, in this case, say Switzerland's economy, just click on there, and then it just runs through everything in detail of what they're doing. It's just amazing, and that's for every country on the planet, obviously.
And actually, speaking about the countries, if you go to countries, it lists everything relevant to that country.
Yeah. which those other links I just showed you go to the same spot. That's right. Yep. So there's
Just
the states.
awesome.
There's the states, obviously.
And mind you, guys, you might be thinking this is an ad for this. It's not.
No,
Absolutely no affiliation with this mob at all.
there's something. I don't do ads. So there's English.
Ah, Alexis has shown it before. Okay, cool.
There you
Yeah,
go,
really
mate.
good site.
Yeah.
What's
Okay.
taking your fancy, mate? Anything?
So the other one, I was just going to
Oh,
show another
okay.
site if you like.
Yep, by all means.
And this, don't laugh at the chicken. I don't know whether anyone, I guess he's pretty well known, this guy. And
Yeah,
he-
I actually saw this for the first time when you sent it to me.
and he doesn't, he's not into the Bill Gates knowing what he looks like. And he's a very intelligent guy, and he's very well qualified in lots of different things. And he talks a lot of sense. And I just brought this one up because we spoke about alternative things to trade when things get a bit tougher down the track, and you might end up with the energy sector or whatever. And we spoke obviously about uranium, but this guy gives you a really big picture on, as you can see, oil, gas.
No, can't see. You need to change
sorry, mate.
screens.
Got to change screens again, do we?
Yeah.
New share. There we go. How's that?
That's in.
So there's our funky chicken, and he's got Doomberg he calls himself, but he's not all doom and gloom, but he talks logically. So he's sort of against the fatty crap, He just talks a lot of sense. And so he's got oil and gas and CBDCs and crypto. This is part one. And if you go to this site, I'm guessing everyone can read where it is on the YouTube thing there. Is it big enough to see? I guess. And it'll take,
The link, you might have to scroll down a bit. Yeah, Doomberg. They'll find it. Doomberg.
Doomberg, yeah, we would be in the in here, I reckon. Yeah, there's Doomberg's website on Substack, so he's not mainstream. And that's once you're here anyway, that'll find this one on the right. Can you see that one on the side there? And then that's part two. You see. So if you open this, you've got to just click on that anyway.
Yep,
So,
cool.
Yeah, and then the second one is about mostly uranium, but it talks a lot more detail and that I was into. But he's far superior. He's not just black and white. Like listen to him and me chop and cheese. This bloke actually, he's really switched on, and he can just put it in language you can all understand. So yeah, if anyone's looking at I'm not saying uranium. What I'm saying obviously is generally the energy sector when we're looking for something to trade during this next dodgy cycle, when other things are maybe or maybe not moving. This if you're interested in the energy, this is a really good lead into it. There was all sorts of references in here where you can go and chase things up. Yeah.
Cool.
For sure.
Did you have another one, you said?
No, I think they were the main.
All right.
The two.
All good.
It was these three and that one that I showed you. Yeah, they were the main.
Yeah,
ones.
no, love that first one. I think it's a great website.
The other thing I had been mucking about with a little bit. I was hoping to have it done on the FTSE for Ash, but I haven't. But I've been working. I think I mentioned to you. I've been working on the time by degrees, but from a longer cycle Ash. So when it gets down to the tin tax, and we're not sure where it's going to go, I've worked out the bigger cycle, like on a weekly chart, which tells it's the same turning time. So except on a weekly. So what it gives us is that we know it's been running down basically for 3 months. It tells us when it's going to turn.
That's really cool.
So that's
really
really cool. I won't go into it now because it'd be better I'll just spend a bit more time on it. It's taken me a week or so to work it out actually, but I knew it was there. I just had to find it. I got it working a couple of days ago, and I've been working on it today a lot, but I'm not on the FTSE. But yeah, you'll be really interested in that one because it really pins it down. Because in fact, you were talking about. I agree with I haven't heard of all of his stuff tonight, but things you mentioned, as we talked before, it's going sideways, and there's so many influences on, you just got no idea really. You just about throw a dart at the moment. And
That's pretty good at darts.
Yeah, that's it. And it really pins it down. And what I started to say was got distracted we actually got out of it. I got out of a position that I don't do that very often, because often I know, oh, it's going to be right. Okay, I made a mistake. It's going to be right in a week or two or whatever. But today I found one that I led Jeff into it too, so he'll probably give me a black eye next time he sees me.
Yeah, you're in trouble.
But luckily we didn't risk the house on it. But but the point is, it was enough for me. This weekly setup that I found, the long-term thing, in conjunction with the one you've seen, the daily one, was enough to tell me to get out just right at this moment. It might only be a week or two, actually, they'll come back, but the risk was on the downside, mate. So to me, it was just, you don't know where it's going, get out. You know what I mean? I mean, I didn't know where it was going. So there's just protect the capital, and we'll you lose I think I lost about 3% or something. So you're going to get that back in 2 days on the exchange anyway. But the risk is it could go more than that. So that's what I did. So it's but anyway, yeah. So the point is, it's just this weekly thing's working. So anyway, I'll share that with you. We'll do it for another show, eh?
Amazing, mate. That sounds good.
Mate, you've got a mate in Tajul. He's on to Doomberg. Sorry, he's in the group actually. It's very popular with the alternative group. I wonder what that is, Tajul. Alternative.
Well, he's not mainstream.
Like crypto type people and stuff. Maybe. I don't know.
He's got a lot of. Well, he's on Substack. We, the mainstream, can't get at him. You see. So
Are you in that?
Like his anonymity. I'm not in.
Are you in? No.
I just follow Doomberg. I just like his stuff. But he does a lot of interesting stuff. I just picked this one because it was topical to what we were talking about the other night about energy sector. That's all. He does some fantastic stuff on all sorts of. Yeah, it's worth looking at. Really worth looking at. Yeah, really
and Taj, you're going back some time. Sorry, I did see that, but we got carried away as we do. Jim Cramer. Is Jim Cramer from what's his face? That funny guy. The guy that runs up and goes. Is that Jim? Is that him? Or is he a trader or something? I don't know.
He's a CNBC. He's one of the CNBC presenters, and he's good actually. Jim Cramer. I think they call him Mad Jim Cramer because he's sort of like he's very vociferous and kind of quite out there, but he is good. I mean, he's one of those guys that is kind of a personality, but he's a clever guy as well. He sort of he does kind of like have some genuinely valid opinions.
No, it's not the real Cramer from Seinfeld.
Oh, I doubt it. No. No.
He's got a better hairdo, probably.
No, he hasn't got any hair. He's as bald as a coot, mate. He's got a little beard. And, yeah.
So, Taj, you'll all right, the conspiracy theorists and the like. You know what? I'm not a conspiracy theorist, but I listen to everything they say. It makes sense sometimes to me.
Well, that's the Doomberg is kind of like edges towards that stuff, and I suppose this is what Doomberg. Well, you have to kind of like filter through some of the stuff, but it is good because it will research something under the hood, but then you have to make sure that you've got your own filter in to make sure you don't go too far that way as well. I think it's quite a good counter argument to many things, and I'd agree with Phil that it's well worth kind of adding to the opinion with something like Doomberg,
yeah,
but I wouldn't follow it.
Yeah, I agree, Ash. He's right in my space as far as that goes. And like you say, I'm not a conspiracy theorist, but when something makes so much sense, you can't ignore it. We've got an open mind, you see. So I look at all.
Yeah, exactly. You've got to have an open mind. Yeah.
Spit out all the rubbish, and sometimes you get some really good stuff out of it. So it's interesting.
Yeah.
Lewis, I agree 100%, mate. This market is not my style. It doesn't suit my eye at all at the moment, and it hasn't. I agree with you for a few weeks.
It's just not easy, is it, mate?
No, I don't think so.
So why would we bother when it's not easy? It's got to be easy.
And I think that's exactly the point. If it ain't there, forget it.
Yeah, and it's easy enough. I think that's the thing with it, isn't it? There are enough easy opportunities throughout the week, and if not the week, definitely the month, that you just don't need to get involved in it. And depending on your kind of expectations, who cares what you make at the end of the month, as long as it's kind of more than well, I mean, I was going to say more than 1%, but because of inflation now, you kind of need to be pushing it a bit further. But you want to make more than the bank is going to give you as a base. Otherwise, there's completely no point. You might as well put
Yes,
it in the bank.
it might as well be in the bank, and you go
You
and
might
play
as
golf.
well, yeah.
Yes.
So you've got to do that, but but who cares what you make? You just wait for the easy ones because they crop up all the time throughout the month, and make sure that you're making. I don't really like to put a number on it, but I think you've kind of got to try and target around about 3% and above to kind of like make trading a decent vocation because of the extra stuff around it. So 2% is okay though. If you're making sort of 30% a year, I think that's a decent return.
When you're
It
doing
is quite okay.
sorry, I was just going to say, when you're doing $500,000 trades like you do, Ashton, 2% is worthwhile.
Yeah, £500,000 pence. Yeah.
It's okay, to not make any money in June and
I
make
agree,
10% in July. It's okay.
I agree. Well, even if you make 4% in July, it's all good, isn't it? It's like, I think there's so much pressure that you've got to kind of, because so many people are sort of always saying, oh, this is going, I'm making this and this every month. It's the problem with that stuff is that they may well be that month, but are they still around in 5 years' time and 10 years' time? And that's really what this game's about. It's about ignoring all the stuff that people say about how much they're making. Absolutely, listening to each other about opinions and approaches. But the amount of money somebody makes isn't relevant to the individual. The other individual. Is really what what you can do, what we can do ourselves. And the targets of aiming for a nice base level of 2 to 3% a month is great. That's a really good start.
Yeah, and it opens a lot of doors as well. I've got to tell you.
Yeah,
it certainly does that. I think the interesting part about coming to that conclusion is the bumps and hurdles that you had to get across to get to that conclusion.
Yeah.
And that's the ride that most of us have to take. It's the pain that we have to suffer. And
yeah, sorry, Jeff.
There you go. I was only going to add to that by saying it's kind of a rite of passage, isn't it?
Yeah. Speculation carries risk. That's just the nature of the beast.
Yeah, I was just going to sort of reinforce that as well. Like I judge myself, as you know, I don't mind admitting what I lost in the past, but I judge myself since then, like a lot of years we're talking about, of course, is how much I make or don't lose in the downtrends.
Yeah.
Because that hones your skill.
Yeah, it does.
Really does.
If you've been trading indices or in particular the equity market, and let's say you started trading 10 years ago, up until 2 years ago, you've had an 8-year period where you just couldn't lose at the end of the day, really.
Yeah, if you're a bull, yeah.
And now most people are on the other side of that, scratching their heads wondering how to do it. That's
these
a
are the years
challenge.
you lose people, isn't it, mate? These are the years when people kind of fall off and inevitably sort of you don't get out at the right time. You keep going, and it does create sort of quite a few trading graveyards, these kind of periods. But yeah,
and if you can negotiate your way through this period, you'll come out the other side with a whole different view.
Yeah,
and a whole lot of different skills as well.
Absolutely. You don't see many surfers riding the waves back down the beach, do you?
Well, they do smoke funny things often, so it's possible they see that.
Yeah.
Once you can confidently, like, well, I mean, I do now, obviously, in these days, but just to be able to trade, I just trade every up and down, whatever, and you can survive. It's a good feeling because it gives you confidence when time's easy. You feel like you're having a party. It's great.
Yeah.
Which is a massive thing. Confidence is a massive thing in trading. Speaking of which, I'm extremely confident that if the euro dollar can keep going higher and higher and higher in the next few hours, there will be ultimately a trade to the downside at some stage. I can't tell you when that is, of course, but
this might be jobs data, mate. This might well be the jobs data, and this is what we're focusing on now. Obviously we've got the BOE, which takes us to the pound, but that jobs data is potentially pivotal. you don't know if it will be in the end because it might be a damp squib, but it might be pivotal. You know, it depends if the forecasts have got it right or not.
Only time will tell that one, of course.
Yeah.
Actually, Phil, I didn't ask you a question that I should have asked you. Today in Australia, right now, we are going through the winter solstice. Should we be paying attention?
Yeah, it's one of the seasonal trades, obviously. My experience is that I certainly wouldn't take a trade based on that. But if everything else lines up, I certainly adds weight.
Yep.
So that's
A layer to another layer.
Another layer. Yeah, that's probably the way. Yeah, I can't seem to make the seasonal trades. I mean, I've actually paid for a program once, or yeah, I think it was a program, some information anyway. Someone was actually trades by the positions of the planets every day. I just couldn't get my head around that one at all. But actually, there was a day I was going to explain. I wanted to show Ash one day. I suppose I could just speak about it, being as it's topical, and that is, as you all know, we use the other 30, 60, 90 degrees, 120 degrees, whatever, for our time by degrees trading, which obviously I've got to work fairly well. But there's one date that we use, a particular, which is, I'm assuming it's based on these seasonal type things, and the number is 224. And actually probably a bit fascinated because you think, where the hell does 224 come into time by degree cycles? Well, as it turns out, it's the amount of days it takes Venus to go around the sun.
Oh.
Now, I think it's 224 of our days. So don't ask me why, but it works on the chart like clockwork. So I use that one. I use that one because it works all the time. But if you put the moon on there, I'll put the moon on there for years, and I did it again recently because when I was polishing my time by degrees recently, I thought it might make more sense of the moon because it does work in a very nice 29 degree cycle, 28 degrees, but it's not reliable on the chart. You could not trade by it; you wouldn't win. But if it works on the same day as, you know, a 60 degree cycle or whatever we happen to be trading, it will add weight. It will certainly make the trade stronger, but don't use it on its own. If you go against the trend, the tide, and you back the moon, there's a 95% chance you'll lose every time. But if it coincides with what's going on, it'll make that move stronger.
I think that's really interesting, mate. And actually, that's really the point I'm making with the pound, is that the pound is an extremely seasonal weak period, really weak, particularly against the Swissy and the Kiwi. But because it's not in alignment with the economic data that's been posted, the seasonal kind of bias has to take the back seat. So now is kind of waiting for that data kind of to match that seasonal bias. I see you got the pound Aussie here, Jeff, and another one. You want to go short. I mean, the seasonal bias suggests like really strong shorts for the pound, but of course it doesn't win every year. I think it's over 20 years is about 13 out of the 20 which were short. So that means there's 7 which are up, and it could be one of those years that ends up going up. So you can't fully rely on it. Everything needs to come into play, and just as you're saying about the price action, Phil, it's the same stuff here. So we've got to have the price action right. We've got to have the catalyst to kind of take us through, just to kind of give us a higher probability. But pound shorts are really the most obvious trade for this particular period, because that's what's happened the most over the last few years, over the last 20 years at the end of June.
Yeah, and I think a lot of these cycles, how do I explain this? Like we're going to have 30 degree, once again, we'll go back to time by degrees, all those things, and then we've got seasonal cycles thrown in, and then we might have the moon, and we might have, whatever else, all these things, and they all work to some degree, and the seasonal ones are one that probably do work on their own system, but I don't completely understand that system. That's what I'm saying. But they certainly work, and let's face it, every now and again, a 30, a 60, a 90, 120, 100, they all line up.
Yeah.
And when they all line up, the seasonal will be lined up, the moon will be lined up, all of those things will be lined up, they're the ones you nail, because you know, even though you don't understand some of those systems,
Yeah.
and the news might be there as well. If all those things happen on the one day, well, you just sell the house, you know. So
Yeah. Well, that's the thing. That's what you're looking for. The easy ones.
Yeah, the easy ones. That's right. Don't
Yeah.
smash your head against the wall. Just take it when it's there and walk away when it's not. And it just makes your life so much. I just don't need the stress, you know. So it's good.
Yeah.
Yeah, absolutely. And you know what? Something just lined up.
Time.
Glass of wine downstairs. So I'm going to go and have some. And dinner, of course, unless anybody's got any more questions, and I don't know that that's the case. Only thing I'm going to leave you with is just keep looking at that euro dollar on the 30-minute chart, and the higher it goes, the better it's going to be for a trade back to the daily pivot. Whatever system you use to get in the market, you know, if it gets up to DR1 or even better, you know, the higher it goes, the better. And look for that downside. It may happen in the last candle of US session. That's the problem. But keep your eye on it, because I think that will happen at some stage.
I've just seen Tajil telling us that Jim Cramer said to buy Silicon Valley Bank.
Yeah.
That's the thing. The page of an opinion. I'm sure sometimes he doesn't really want to say anything, but he's pushed.
Exactly. And you know, you and I struggle with that as well, you know, in the early days of this show and all other shows that we've done and we do. If we're they're kind of called or led to be trading shows, you know.
Yeah.
So people want to see you trade, and of course they want to see you trade. And I get that, because that's where people like to be. They like to be in the market. But if it's not there, it's not there. And, you know, forcing trades will only force your account in one direction, and it ain't in the right direction. So,
Agreed.
you know, that's something you and I had to kind of learn as well. You know, it's not this show's not entertainment. It's not about entertaining you how we can place an order in the market, because that's all you're doing, unless you've got a conviction of that trade. You know, anyone can place an order, but placing a winning trade or a trade that makes sense is not necessarily what you do on the spur of the moment when you're presenting a live show. So,
and that's part of learning the skill of trading, isn't it? Knowing when to stand aside. I don't see that as a problem.
You bet. No, it's not a problem. But when you are doing shows like this, it's a bit of pressure to actually force a trade, and that's the worst thing you can do is force a trade.
Agreed.
We're out of here.
And we're going to catch
We're
up
out of here.
We're going to catch up on Sunday this week, guys, or not?
I think we can.
Yes. Yeah. This Sunday's fine.
Okay. See you then.
Happy days.
Thanks, guys.
Thanks for being our trading buddies, everyone. Ash and Phil, thank you for being my trading buddies. And everyone else, have a great weekend. And Silicon Valley Bank, that's a bit of an issue. but everyone gets it wrong sometimes, that's for sure.
Yeah.
Have a great weekend, everyone. Bye for now. Hooroo.